how do I make 100% a year annually so we can just like fuck the 4% rule? Just give me the 100% rule. Like if I need, $500,000 a year to survive, how can I create that with just $500,000? Steven.
Yeah.
How?
So I don't know if I told you guys, but I ended up in this MicroStrategy Twitter group.
These are great, by the way. We should come up with all these little TikTok financial hacks and give them the thumbs up or thumbs down.
What's this one called?
It's called Irresponsibly Long MSTR.
Yeah. There's like Sailor in there probably.
I don't think he is.
Okay. You should probably be in there.
But it's basically just a giant cope fest because like half the thing bought at like $400 and now they're break even, but Bitcoin's up. And like every post is just them bitching about how Sailor's diluting them every day.
Oh, really?
I
thought they'd be psyched because like I thought the stock was up like 100%.
It's a giant cope
like,
fest. Everybody's like, why Bitcoin up more? When Sailor stops diluting? It's terrible. I actually left it because it was just so insufferable. But like one of the things that went around in the group was there's a bunch of people who are like very into MSTY, and MSTY for people who aren't down with the
down with derivatives.
ETFs, yeah. So MSTY is basically like this like ETF that seeks to do nothing but harvest volatility from MSTR and just pay you income.
Yield,
straight yield, baby. It's designed to basically dilute your value to zero over time and just pay you out all the cash. It does this by basically just selling covered calls on MicroStrategy. And the yield is crazy. Like the yield on average over the last year has been like 100%. And right now it's like 130%.
Mm-hmm.
Right. So if you put like 100K into this, you're getting $130,000 a year in yield.
Assuming that the yield stays the same.
Assuming that the yield stays the same, and then assuming that the value of your, because there's like a decay in like the value of, or at least there should be.
Not necessarily. If the stock price goes higher, then the NAV of the ETF will.
Yeah,
go
if Bitcoin
higher.
keeps going up a lot, then actually you're not really losing anything there.
Yeah. MSTR is more important.
Same.
Can you fast forward and just tell me what happens when Bitcoin and MSTR goes down?
So if Bitcoin and MSTR goes down and the volatility is still high, actually you do pretty well in this because you'd still be harvesting all the vol.
But are they harvesting the volatility by not only buying calls but buying puts too, or like how's
No.
Selling?
Okay, so no, yeah. So in this situation, like I am very familiar with this. Like Steven brought up to me yesterday, or brought up to us yesterday, but I was familiar with the Coinbase version of this. It was like CONY was the ticker symbol.
Yeah.
That one performed poorly because Coinbase, the stock went down.
That's what this guy says.
Yeah, the stock went down. And when you own this Yield Max ETF, you own a synthetic long, meaning like a synthetic common stock holding, and you sell covered calls on top of that.
Okay.
So you're exposed to downside. But as Steven,
because your underlying goes down.
Yeah, the underlying price goes down.
Okay.
You
NAV goes
you're
down.
Short a put, so like you go down like the stock does. But if you're earning 130% on premium, that can like more than absorb, a stock price fluctuation.
But what about do you have the same issue if MSTR goes up? Aren't you kind of screwed as well? Because what I understand they're doing is buying like kind of near the money call, or selling near.
No, you're not screwed. You're making a lot of money still.
You're making a lot of premium.
You're making way less money than had you just purchased MSTR.
Yeah.
Yeah,
but that's not the point of owning this in the first place.
Yeah, so you're both right. I think what happens here, like the mechanics of this are simple to me. It's sort of like what I've been screaming from the mountaintops, I guess, to you guys for 2 years, is like harvesting volatility premium is like the name of the game. I don't like the way that the Yield Max does it, but the way that they do it is very similar to what I'm into. I think there's a way to improve upon it.
They go like one standard deviation.
We don't know what they do. They don't say what they do.
I know exactly what
you
they
can
do.
sort of.
I know exactly what they do.
How do you know? They don't tell you.
Yeah, it's in the S1. I just read it.
It's in the S1?
They said that they sell calls 0% to 15% out of the money.
Yeah, there's a range of steps
on a monthly basis.
Yeah.
So on a monthly basis, selling 0% to 50% of the money is basically at the money in my eyes as a practitioner. It's like it's like way too close to the money for what I'm comfortable with, such that what Nick said is appropriate. Like, you give up your upside for income.
Which is the whole point of you owning this.
Yes, I agree. But I actually think there's a better way to do it, which is like what I've really been shouting from the mountaintops, which is that you can have your cake and eat it too, essentially. It's like, I like the upside of this. Like, MSTR is a stock that I like. Like, you can run this strategy on any stock. I mean, this is another thing I've been
You can do it on IBIT in your IRA.
You can do it on anything. Like, selling covered calls, particularly against a synthetic long position, is like something you can do on anything. The reason why MSTR is the best is because it has the highest IV. It's like got the highest premiums, and that's why you're getting 130% returns. That's good. But I'm getting 75% returns. I just calculated this morning because I wanted to see like what I'm getting. Selling something that I've never been capped on. Like, this is like MSTY is the ticker. MSTY caps your upside. If you want to cap your upside on a stock that goes fucking mental at times, that's stupid. I go uncapped, in quotes, like I am technically capped, but I have been trading this thing for a year and I've never hit my cap. So I call it uncapped, and I'm still making 75%. That's way better.
So what are you doing? Like, further than 3 standard deviations out of what you think could possibly happen to the stock?
No, it can't be that much. If
yes,
you get 75%.
typically. Yes,
but then what's your expiration date out? Like a month?
A week.
A week. Okay,
but
so you're doing weeklies.
I roll them over and roll them over. And that pays more than doing 12 monthlies.
I mean, if you do 3 standard deviations on MSTR, you're probably making like 20% a year, maybe.
Well, here's a caveat as well.
Which is a lot.
No, first of all, it's more than that, but it depends on what your measurement tool is. This is an important thing to mention on like selling vol premium. It's like, what are you using as your denominator? Like, some people use the covered return.
I was going to ask you this, yeah.
Which is like your entire notional principal you have exposed.
Sorry, or is it you're gonna have to explain that. Can you dumb that down a little bit?
Okay, well, let me just like explain the easiest one first. The easiest one first is like your account balance, right? If I made $1 million and my account balance is $1 million, I've made 100%, right?
Right.
But if I've sold $10 million worth of MSTR to make my premium, then I've actually juiced up my returns quite a bit. So there's like a different way to measure that. You can use a covered return, which is use 10 million as the denominator instead of 1 million.
Right. You're buying $10 million MSTR and then you're selling.
No. Yeah. Well, I still have a $1 million account value, but I just sold a premium for $10 million. So it's like leverage.
Oh, I see.
And then another way to do it, which I think is the best way, I think I've like created this myself essentially because I've never learned this through
the
like
poor man's covered call.
No, it's essentially just like,
I don't think you invented that.
No, I didn't invent that. But I took what practitioners use from like your world, like real estate that uses a lot of leverage, and you basically like what I was trying to do is to determine what was the return on this slice of my portfolio that held a ton of different assets. Because like my portfolio isn't all MSTR. I think like it'd be stupid too, but
yeah,
it gets a lot harder to determine your return on a portfolio if there's like a lot of different levers that are contributing to it. So you use a return on the collateral,
right?
A return on your collateral that's used. Like, what collateral did I appropriate to this trade, and then what's the return?
Which is how real estate does it. Like,
exactly,
you return off the actual cash that you put in, not like after it's levered or whatever.
Precisely. That's where I drew it from, and that's what I'm calling the 75%.
Okay, guys, but I need to bring this conversation back into the realm of the 99% of people who are listening to this podcast.
Okay.
2 things on this. One, comparing this to owning MSTR and writing covered calls is silly. The better comparison is comparing this to like owning like bonds or cash. Like, the whole point is like, this is a part of your portfolio that's like maximizing for generating cash flow and minimizing downside vol. It shouldn't be compared to that. And the other thing is like, most people listening can't execute the strategy you're talking about. Like you can execute it because you have expertise, right? But for a lot of okay, like a more extreme example of this is like people have created these like very interesting products where you can basically buy Bitcoin, have a guarantee that you will never lose money, and then basically make like 8 or 9%. And they structure this via options. It's like this kind of like zero downside thing, and
but
like,
also like restricted upside.
correct.
Right.
And a lot of people are like, why wouldn't you do that? Why wouldn't you just buy Bitcoin? It's like, well, the target person for this isn't somebody who would otherwise buy Bitcoin. It's somebody who's like investing in muni bonds or something.
Agree, which is why I always thought that these, like, even the convertible options that Saylor's always selling could be like good investments for a retail investor. And I'm confused why they aren't offered as such.
Yeah.
Can I ask you a question about the stock that you mentioned? So
MSTY?
Yeah, so let's just assume MSTY is at $100, right? I buy $1 million worth. It says it's giving 100% yield.
130 right now.
130. So let's say that first year it stays at $100, the stock price. I get $1 million.
You got all your money back.
I got $1 million back, right?
Free roll.
Now, if it goes down to $10 for whatever reason, Bitcoin goes down, MSTR goes down, is the yield based off of the $10 or the $100 stock
Based
price?
off of the $10.
Okay,
it's
so
like
now
your
my
balance
yield is
decays.
$100K a year.
Yes.
Oof. And my principal is down 90%.
It's like an annuity kind of, right?
No,
That sounds brutal.
no.
That sounds very risky.
Here's the situation. And
Why is that risky?
Because like I just put $1 million of principal at risk for, yeah, sure. I got 100% returns in the first year. I was lucky. But then Bitcoin and MSTR went down. Now my $1 million is almost gone. And I'm not getting like, it's not a fixed income product.
Bitcoin
right?
would have to go down so much for you to lose the entire principal.
Right.
Like,
I know. I'm just
it's
taking an
over.
extreme case to like make the point that it's,
okay, so
there's a trade-off here.
yeah, Nick's
Of course there's a trade-off.
Nick's like walking in a direction that I like, which is to say, like, in what situation is this a good, like, winning versus losing? Okay?
Let's talk about the situation where you make the most money. The best situation for this is like high volatility chop on Bitcoin. Bitcoin goes up, Bitcoin goes down, Bitcoin goes up, Bitcoin goes down. Crazy vol goes sideways. In this instance, like MSTY is harvesting vol left and right. None of the calls are even getting exercised because never breaks out of the range. It's just yield.
Disagree. This is actually how you get fucked.
No, it's not how you get fucked.
Yes.
No,
dude.
it's not.
Yes, because these things are path dependent. This is the actual problem. There's a path dependency to this because they sell capped upside. So if MSTR goes down by 25% and then you cap your upside at 0%, you actually can't go back to 100.
No, but you're comping it to owning the underlying. Yes, if you're comping it to owning Bitcoin, then the best case scenario is not that. It's
okay. So then let's talk about the best case scenario. The best case scenario is we get a gradual, slow increase in MSTR. Like that way, you never lose your covered calls. You still collect a premium.
If you have a scenario where it just drifts up, vol stays high, and for some reason, like it never hits, then
it's the best scenario.
It's like not ever happening.
Question: are they giving monthly dividends or quarterly dividends?
Monthly dividends.
Ooh, okay, that's a little better.
Monthly dividends.
That's a little better.
Like the way I'm thinking about this is like it's very interesting. I think if you're basically like I want to denominate in Bitcoin, right? But you're also like I want some of my portfolio in like cash, but I don't really want cash. I want like something else, right? Because then you can kind of have like say 70% in Bitcoin, or you can put 30% in this, and then even though if it's like say Bitcoin crashes, right? Your MSTY will go down a bit. But also now you actually kind of have like a bit of a cash option. Like you've got a bunch of cash in your portfolio effectively. This goes down way less than your Bitcoin. And then you can kind of transfer in to buy Bitcoin.
Wait, can I just take like, let's say $250,000 and buy MSTY the day before the ex-dividend date and then sell it 2 days later? Can I do that and capture?
Yeah, you can do that.
Capture like 10% yield on it?
Yes.
Obviously, other people are doing the same thing. You might lose 10% in your
the stock price.
It's the same with like dividends.
The
on
stock
stocks,
price
right?
adjusts directly to reflect that.
Yeah,
it probably adjusts even worse.
Even if on a day that Bitcoin goes up,
it probably adjusts worse because there are people trying to do this thing, and it ends up being
okay. So the thing about this that really got me going, the reason I thought about this in the first place was because of that like Jason Williams post that we had on the screen where he's talking about somebody from Reddit like buying this on margin, which I thought was kind of hilarious, like margin buying this like yielding instrument. But then I was thinking like on interactive brokers, I think you can buy this with like 50%, right? So if you put like 100K down, you'd basically be getting $260,000 a year on your 100K.
This is like literally in one. I created a list of how not to get rich, and this is one of them. This is like I'll file this under TikTok TikTok investment schemes. just don't do this. If you want to get rich, just avoid this like the plague.
I think this is actually like a
I was going to
very
ask, like, what's
interesting strategy for like a portfolio. I don't think your whole portfolio
It's
should
a
be
tool
this.
in your tool belt if you know what the fuck you're doing.
I think having like 5% of your portfolio and this is like very interesting.
There
actually.
we go. That's what I wanted to know.
Like I'm going to do this, by the way. I'm actually going to do the more advanced version of it that we haven't talked about, where you're basically just doing it entirely with options. Maybe that's a little too deep, but the level 2 of this is basically you never buy MSTY. You just sell puts on it right before the dividend date, and then if you get exercised, you take the stock, but then you immediately just sell like covered calls on it for the next dividend date.
You should
and you
just
keep
do
doing
that with MSTR. It pays way more. The IV is way higher. That's what I do.
Ooh.
I don't think it's that simple.
I literally do.
Bro,
it
you don't
every
work.
day.
You don't work
Because
anymore. Eric. You don't work anymore.
You have to own MST, but you have to buy MSTY to do it. You're exposing yourself to downside
I don't work anymore.
and MSTY and MSTR if you do that. It's like a different like risk profile, right?
I don't see how. Like MSTY can go down too.
Right, but if I'm just selling puts on MSTY and it goes down, I just make money. I just make my income. I just make money. That's the strategy starts just selling.
You're saying if you sell puts on MSTY and if it goes down below your strike price, you make money?
Well, I get delivery of a stock at a low price that I want before the dividend.
How is that different from what I'm doing on MSTR?
Because you own MSTR.
When should
And
we interrupt
MSTR
this?
can
How
go
long
down
should we
way-
let them go?
This is exactly what I do. What you're describing is exactly what I do. It's amazing.
Well,
It's fucking incredible.
irresponsibly long segment.
Yeah,
Have we gone too deep on this?
a little bit.
Do
A
we have
little
to pull?
bit.
All right,
there's-
let's pull back
There's
off
probably
the
like
rails.
8% of people who are like
I
actually.
think you can go. I think you can go deep as long as you also blue collar version it. You know?
So
The blue collar version is to just buy the MSTY. It's
No.
like a funny thing to have in your port.
like we both came to the same conclusion. The way to get
That's
rich
funny.
is to sell out of the money puts on MSTR.
No, that's way too complicated for like 99% of people.
Okay.
Eric, send the spreadsheet. You sent me the spreadsheet. It's actually not okay. Weekly is a little too much for me,
Yeah.
but monthly.
Selling puts on MSTR, like the downside of selling puts on MSTY is way less. Like you sell a put on MSTR and like Bitcoin tanks, you're getting fucking annihilated.
I like
It's literally the same thing,
my
dude.
It's not
keep it
the
simple.
same.
Stupid is just selling way out of the money calls on my IBIT in my IRA because all the income
that.
is like tax free. You do it once a month. You collect a little bit of premium, and just like over the time from now until when you're retired, a little extra juice.
Good one.
And if you actually get, called, your shares get called, you probably sold at the top anyway,
Yes.
right? So
Nick's playing the game right. So is Steven. He just doesn't know that I'm talking
better
the
than
same
him.
game.